What is up, YouTube? What is up, Canada? Matt McKeever here. In today's video, I figured let's just talk a little bit about inflation. Actually, let's talk a lot about inflation. So what I decided to kind of call this video is the Great Inflation. And now I thought I was kind of clever coming up with that name, but I knew someone else would have already came up with it. So a quick Google shows me that it's actually a name of a book. Today's video has nothing to do with the name of that book. It's more in the lines of me thinking towards, we had the Great Depression, right? Then we had the Great Recession. Are we maybe going through the Great Inflation right now? That's really what I want to discuss with you guys and explore. So I'd love to hear your thoughts and your comments, as well as just your anecdotal experiences in regards to inflation. So let me know in that comment section, are you currently experiencing inflation? Are you seeing inflation in regards to the rent you're paying? Or are you seeing inflation in regards to the utilities you're paying or the food you consume, or any of the other spending categories that make up a significant portion of your spending? Are you seeing inflation there? And so what really got me thinking down this entire train of thought, I guess, was just looking at what's going on right now with Canadian real estate. So if you guys haven't been paying attention to what's going on with Canadian real estate right now, the market is absolutely on fire. Here in Ontario, you can probably pick just about any market in Ontario, and you're going to find it's got probably less than 2 months worth of inventory in regards to real estate listings. As well, you'll probably find it's near a 10-year high for prices. And you'll probably also find that it's actually doing a higher volume of transactions than last year. And prices are probably up anywhere from 20 to 30% year over year. And in some markets, even higher. Now, on the surface, that certainly sounds crazy. And if it wasn't for the fact that we're seeing a higher volume of transactions than normal, I can naturally understand people thinking like, hey, something's weird's going on. Like maybe this is a bubble. Maybe this is unsustainable. But the strange thing here is we're seeing more transactions occurring than essentially ever before. And that's at these higher prices, right? Anyone that's kind of followed along with other financial assets, usually that's really going to start to establish a new price for flooring, right? If we see a high volume of transactions occurring at a new price point. And so I think it's going to be really interesting to see how things develop going into the rest of 2021. But the one discussion point I want to have with you guys today, and I'd really love you guys to jump in the comment section and let me know, could this be something that could actually go on forever? Now, understand, I'm not saying that this is going to go on forever, but I thought this could be an interesting mental exercise. Right now, we appear to be on a bull run in the stock market. We appear to be on a bull run, and I'm looking at, if we say, look over the last couple of years, we appear to be in a bull run in regards to the stock market. We appear to be in a bull run in regards to real estate. We appear to be a bull run in regards to Bitcoins, NFTs, and any other of those new kind of exotic financial assets or instruments. Can you find something that's not more expensive today than it was a year ago? Like where are we not seeing inflation, I guess, is one of my curiosities at this point in time. And we've got government spending, obviously, at unprecedented levels. And did we all just kind of collectively decide that inflation was really happening, or maybe even hyperinflation? And are we all fleeing from fiat currency into anything that's considered a harder asset than fiat paper currency? Could that be what's going on right now? I'd love to hear your thoughts, your comments. Let me know in that comment section. I see we've got a couple people right now. We've got Discover with Discover saying yes. We've got Sunny Kang saying Haven. We've got Tom Testing saying, you remind me of when Kyle's dad turns into a dolphin. I don't even know what that means, but okay, I'll take it. I'm kind of a fan of South Park. I'll have to go back and watch that episode. I saw you recommended that was episode 1, season 9, I believe. And dude, this can't go on forever, or can it? Yeah, that's literally my entire point of this video is, let's play with a mental exercise. Again, everything I learned in university, everything I believe I understand about economics would tell me that this seems weird. This feels unsustainable. And, I guess even before I go down this thought exercise any further, one caveat, maybe one disclaimer I should give you guys is if this is the first video you've ever stumbled into on my YouTube channel, in my content ecosystem, understand I'm all about fundamentals. I'm not about speculating. I really think you need to be dialed into the data more so today than ever before. In fact, these days I'm studying the data from CREA, from StatsCan, from CMHC, from any source I can get my hands on to a greater extent than any previous time in the last 11 years I've been investing. And that's because there does seem like some strange signals or some strange information out there in the market. And it seems hard to believe that the average Canadian can continue to afford these increases in prices, and yet demand just seems to keep increasing. So like, how do you reconcile between those very two different dissonant facts, right? Like, I definitely struggle to understand, like, higher trading volume in real estate, higher prices, lower inventory. And if we look at it again, for most markets to return to their 10-year average in regards to months of inventory, we'd either have to see, demand drop almost to a tenth of what it currently is for at least a month or two to build up some inventory, or more realistically, we'd have to see more listings come on the market. But again, we'd have, like, even if we saw double the listings we're currently seeing right now on a monthly basis, it would actually still probably take half a year to have that inventory build up to a level that most realtors, I think most economists, would consider to be a balanced real estate market. So again, not saying that this is good times are going to last forever. I'm not saying you should just blindly jump into real estate today, but I'm saying I think there is an argument to be made here that could this time be different? And again, the moment you say that, you almost guarantee it's not going to be different. So I'm not naive to that fact, guys. But where are you not seeing wild inflation right now? And this is something that I've been talking to with Cashflow Tribe and our high-end mastermind, the council, as well, a little bit. And even when we're looking at just like basic groceries, right? I'm not sure if you guys have noticed, but packaging has changed substantially over the last year, let's say, of a lot of different products. They're shrinking in sizes, right? The suggested serving sometimes seems to shrink a little bit too, which makes it seem like you're still getting the same amount, even though you're actually not. And definitely other things are just way more expensive than they were before. Like fresh fruit and vegetables seems like way more expensive to me. I don't buy meat, but I imagine that's a lot more expensive too, just because it seems like everything in the grocery store is. So again, let me know what you guys are seeing personally, but have you thought about this? And is this influencing or impacting in any way your real estate investing strategy? So, does this sort of line of logic make you more comfortable going into real estate or actually more scared? Because again, there's an argument here. If we're all scared of hyperinflation, there could be bigger concerns for our economy than just where real estate prices are, right? Like this could have much bigger implications if we've literally all lost confidence in our underlying currencies. Again, not saying that that's the case, but there appears to be some interesting signals, right? Especially when we see large corporations and more large corporations diversifying their currencies that they hold, right? Whether it's Tesla going into Bitcoin, MicroStrategy has been going into Bitcoin in a big way for a while, right? With Michael Saylor, but lots of interesting developments. And I can't help but wonder, for the last 11 years, I guess, maybe I'll take a step back here and go into story time a little bit. For the last 11 years, people have been telling me that Canadian real estate's about to crash. So they've been telling me, don't get into Canadian real estate. It's too expensive. Literally since late 2009, I've been hearing that. And a lot of those people have been waiting for the last 11 years to get into the real estate market. Again, I'm not saying that you should jump in today just blindly, but I'm saying I'm really glad that I started. And the reason I'm glad I started is because it started my journey of learning. And that's the big thing you miss out on when you sit on the sidelines. So again, even if you're thinking about getting into stocks, into cryptocurrency, into real estate, step one at the bare minimum is starting to play with one of those play portfolios, right? Like that's a step towards starting to think about it critically. But nothing forces you to think critically about investment, like actually putting your money where your mouth is, right? The moment you actually put a little bit of money into it, like right now, I've been researching a little bit about NFTs and crypto, and I might start to put a little bit of my money into it. But I know that the level of information, education, and research I do will change dramatically the moment I've got skin in the game. And I think it's important for people to understand, if you've been waiting on the sidelines for the last 11 years, waiting for the real estate market to crash, like, guys like Garth Turner at The Greater Fool have been talking about for the last 11 years, ever since I've been following his blog, he's been screaming from the top of the hilltops about the Canadian real estate market crashing. Odds are he will eventually be right. Odds are we will eventually see corrections in these markets. Odds are we may see a regression to the mean when it comes to pricing or affordability. But think about what's happened over those last 11 years. For the last 11 years, people that have been waiting on the sidelines are saying that real estate's too expensive. Really, all they've been reinforcing or learning is how to say real estate's too expensive in different ways at cocktail parties. While those of us that decided to take action, those of us that jumped into the market, we've been gaining experience. Maybe we've made money, maybe we've lost money, but we've absolutely gathered some wisdom, gained some experience. We've got the t-shirt, been there, done that, all that good stuff. I think that can't be overlooked, right? When I'm trying to explain to people how to get into real estate investing, one of my first questions, if you're struggling, if you're not satisfied with the results you're getting as an investor, is how many offers are you writing? Just straight up, how much action are you taking? Last night, my team, every Wednesday night, we watch we call it Team Impact Night. We often watch like an impact theory or another motivational video from successful entrepreneurs. I think last night we were listening to, is it Mark Randolph, one of the co-founders of Netflix, and him and Tom Bayou were talking about how action cures all. Right? I've got an alarm that goes off on my phone every day at 1 p.m. that literally just says actions before results. And it's so important because it can be so easy to talk about these things, but talking doesn't calcify into any sort of experience. So again, I really want to encourage you, whether you've been waiting on the sidelines for the last 11 years, whether you just decided to become an investor today, don't let just the noise in the market hold you back. Dial into the data. Look at the supply and demand, right? What is your investment strategy? Are you playing for cash flow? If you're playing for cash flow, you probably shouldn't be playing in the Toronto condo market, right? Something we've talked about in the past. If you're looking for appreciation, maybe that's the perfect time, or realistically, probably a few months ago was the perfect time to buy then. And if you guys haven't been following along with our videos with Emma Pace, she's constantly keeping us abreast of what's going on in the Toronto real estate market. And that's why I'm doing all these different interviews and sponsorships with these local realtors, is because I want to bring you guys more and more data, because I want to make sure you're becoming more and more informed, because as the market continues to increase, as it seems to get more and more heady, as it seems to head more and more into bubble territory, you need to be more focused on the data than ever before, because you can still make money in today's market, and you can probably still make money in tomorrow's market, and you could definitely make money in yesterday's market. But the people sitting on the sidelines absolutely have not made a penny, and they haven't learned anything either. And I still think that that's the greatest sacrifice that they've made over the last 11 years, is that lack of learning. So I see Sonny saying he's excited for the pitch tonight. Really appreciate that. Yeah, if you guys didn't realize, every Thursday night at 7:30 Eastern Standard Time, we go live for the pitch. I get on at 7 p.m. and I couldn't remember. I was like, did we start at 7:30? Is it 7? But anyways, every night, or every Thursday night, 7:30. Tonight, we'll have 2 more investors coming on, pitching us interesting opportunities in the real estate and entrepreneur space. It'll be myself, and we've actually got 2 special guests tonight, so guest judges. So again, if you guys have been enjoying it, definitely make sure you check out tonight's episode, and I appreciate the support, Sonny. And also, Sonny was recently just on an episode of Deal Destruction. So Neil saying building materials. Sam John was saying, I think the homes, condos below $1 million mark will continue to be hot. Looks like the $1 million+ market will become stagnant for a few years. Yes, Sam, definitely some of there's obviously an affordability issue once you go over that $1 million price point. But secondly, a lot of the rules around CMHC and that the lenders have do restrict people from getting access the moment you're trying to buy a principal residence over $1 million. So I definitely think that those regulations will create a certain separation in pricing, right? So definitely agree. I always love being on the lower end of the market, right? So the entry level, right, the beginner house, starter home, those are the best price points in my opinion. It's my bread and butter. It's really the part of the market I like to be in, but that's also the niche I've developed, right? So I'm not saying that it's the only niche, it's the only opportunity available for you guys, but it's definitely the market I'm attracted to. Sonny's saying that makes him a little bit more scared, but real estate is forgiving over time. Definitely, right? If you're trying to time the market, it's very scary right now. If you're focused on time in the market, if you can truly take the macro view of dollar cost averaging your real estate portfolio, as long as you're investing for fundamentals, as long as there's affordability there, assuming that we're going after cash flow, you should be able to white knuckle through any short-term disruptions or any short-term distractions. But the key is knowing why you got into it, right? When you start getting a little bit more into Bitcoin or cryptocurrency, people talk about the mistakes that those that aren't 100% committed make, which is whether the price goes up or down, they get shook loose, right? Because they don't have diamond hands or whatever the Redditors want to say. But there is an aspect to that if you're not committed, if you don't really believe in your investment thesis, the moment there's noise, the moment there's any news that doesn't reflect your expectations, you're going to get shook loose. You're going to immediately panic and head for the exit. And that's often sometimes the worst time to actually exit. AG saying, love the recommended video. Is real estate crash coming video you made from 3 years ago? Fuck. Actually, that would be a fun one to go back and do a reaction video too, because everyone's been wanting me to say that we're going to have a crash really soon. And again, we've just been focusing on fundamentals, right? And it does sometimes change the profile of property we might invest in, right? Just last week, I was saying to you guys, we closed on a 20-something unit in Chatham, and we just went firm on 2 more 12-plexes in Chatham. Now, again, 2-3 years ago, Chatham and buying apartment buildings there wasn't high on my list of priorities, but as the market's adapted and evolved, we've had to adapt and evolve our investment thesis a little bit as well. Now, again, that doesn't mean we just blindly start chasing returns. That's not our goal. We're being very strategic moving into the Chatham market. And once we've got a toehold there, our plan is to really grow our portfolio so that we can have another hub in that region. But choosing to have that hub was an idea or decision I don't think we would have made 2 years ago. But again, as the market's evolved, as we've seen just through our boots on the ground experience, that prices are changing dramatically. It's shocked. We had a realtor essentially tell us a big F off just the other day. And my partner was reading us the email actually today on a conference call. And this realtor was, it sometimes makes me mad, but he was chastising us about how naive we were because we didn't want to pay $300,000 a unit for his shitty properties in London and St. Thomas. And it's just wild because, I don't even know if definitely 10 years ago, they wouldn't have even had the balls to say buy it for $100,000, and now they want 3 times that amount. So it's definitely interesting and funny to see, but we also have to adapt to where the market is, right? The reason we were able to get into those 2 12-plexes in Chatham is because we were creative, because we negotiated vendor take-back mortgage. So we actually did pay a little bit more in price per unit than I would have liked to have done. However, it still made sense in the big scheme of things and still fit within our investment philosophy because we could help smooth the cash flow needs or increase the cash flow essentially by having favorable terms on that vendor take-back mortgage. As well, you guys know one of our other favorite ways to be able to really increase the opportunity out of property is trying to negotiate vacancies, right? So I think we're not getting a ton of vacancies with this, but I think we're maybe getting 1 or 2 vacancies with that building as well. But again, that can dramatically change the mental math and the projections from cash flow if we can get 1 or 2 units up to fair market rents, because in some of these older buildings we're going into, the increase could be as much as 100%. In gross rents, and that can obviously dramatically impact your bottom line. Now, there's costs associated with upgrading those units and all that stuff, but definitely food for thought there, guys. There is still opportunities out there. You just need to be more careful, more dialed into the data than ever before. Inflation in materials makes the margins tighter in flips. Yeah, definitely, Neil. At the same time, the crazy bidding wars, I think, are also helping save people, right? Doesn't matter what realtor I talk to. I talked to a realtor in Toronto this week that was showing me a condo that had over 50 offers. I think we were talking to Kayla in Niagara and St. Catharines just the other week, and she was saying something like there was 1 or 2 properties that got into the dozens of offers. So it is very competitive out there. I think it's one of those things, though, where it's a problems or profits moment. They almost all moments are problems or profits moments, but you can really view this as man, I'm getting killed every direction. My cost to buy the house is more expensive. My materials is more expensive. There's more stupid investors coming in willing to overpay and squeeze margins. I don't think any of those statements are untrue. At the same time, there's also more demand for your flip product than ever before, and people are more emotional. I was just talking to an investor out in Regina, Jancy. If you guys remember Jancy way back in the day, we went out there in 2018. Went out and hung out with her and saw some of her projects. She was telling me a flip she's doing right now in Regina where someone heard she was flipping the property and said, I'll buy it. And she was like, I don't think you understand. It's not ready yet. It's still at the drywall stage. We haven't even taped and mudded. And the person was like, what price were you going to sell it for 2 months from now? And she was like, this price. And they're like, can I buy it now? So again, there is a lot of demand. There is a lot of interesting developments in the real estate market. When we see buyers being that proactive, again, it tells us where their psychology and mentality is at, right? There is a fear of missing out in this current market. And as we continue to see inventory stay low, as we continue to see demand stay high, presumably that's going to create more and more pressure on those prices. And that's why I'm saying maybe this time it's different. Again, I'm not guaranteeing that, but could this just be the great inflation? Could it just be that we're seeing wild inflation in every asset class, and that it's actually just really our money's getting way cheaper, and that it's not that everything else is going up in price? Does that make sense? Let me know in the comment section. I see, Jared is saying assets dropped over the past year, partially recovered, oil stocks. Yeah, maybe over a very short period of time, but when you look on the macro scale, and when you look at the multiples that most of these stocks are trading at from like a PE ratio or anything like that, it definitely seems like we're still in a very bullish cycle where people are paying a lot of money for very little income, and sometimes just speculation, it seems like, at least from me. I see you mentioned here about Japan as well. Yeah, stagflation is definitely a concern. It's definitely something that I think we need to pay attention to. Again, could we be going through a hyperinflation cycle right now? And what and how will our economy, the jobs market, all that react to it? Can the government just out-stimulus their way? And again, one of the reasons, I actually forgot this talking point. One of the reasons I wanted to even do this video was, did you guys see that the Liberals essentially just said, like, nah, we don't want to do a budget this year again, or at least not this month? So, it's possibly going to be 2 years. It's almost already been 2 years since the Liberals have done a budget, but it could possibly be over 2 years before we have a federal government that prepares a budget. They're the only one in the G8 that couldn't get a budget together. All the other provinces that they, control, they were able to put together their budgets, but literally there's just no interest there. And when you see some of the crazy boondoggles, right, whether it's them saying that the CRB program was going to cost what was an estimated 30 million by March, and it ended up being, or 30 billion or whatever, and it ended up being double that. Whether it's the crazy boondoggles when it comes to building Navy ships that why do we even really need a serious Navy? But then we end up spending 5 times the initial budget on that product as well, with still no guarantees. And essentially the governing bodies that look into it, essentially we don't actually have a good reason for it either. There is a little bit of a deterioration in the faith of our system here. And I could understand, again, at least the thesis that maybe this time it's different. Maybe it is the great inflation. Maybe we are seeing all of us just kind of collectively decide to head for the exit doors on fiat currency at the same time. Not saying that that's the case, and who knows, but I think it's worth the thought exercise. I think it's worth, spending tonight, just set aside an hour, go sit in the dark and think about it, and really just wonder, how much faith do I have in this system? How much faith do I think other people have in this system? Because this essentially ties back to game theory, right? Common knowledge. And essentially, as long as we all agree that we've got faith in the system, then there's no risk of the system failing. But if we start to think that everyone else thinks that the system, or if we start to think that everyone else doesn't have faith in the system, then you start to get into kind of this prisoner's paradox, right? Where you want to head for the door first so that you're not punished, right? One of the things that I constantly talk to my team about that I'm still kind of flabbergasted at, I don't know how the Roman army was able to manage their people as well as they were. But if you've studied history whatsoever, what really separated them was the discipline of their army, right? And that discipline of being able to hold the line, right? That discipline of not breaking ranks, that discipline of having, a hateful enemy charging at you and being able to just stand and hold the line, because the vast majority of casualties actually came when you broke the ranks, when you started to retreat or run. Could it be that we all just broke the ranks and retreated at the same time? Some of us retreated to real estate, some retreated to Bitcoin, some retreated to stocks, but we all just decided to GTFO when it came to fiat currencies. Yeah, I'm not saying that that's the case, but I think it's an interesting train of thought, and I think it's more warranted than ever before. So again, me saying that people don't have faith in the fiat currency isn't anything new. Since the US dropped off the gold standard, that's been a pretty common narrative from libertarians and gold bugs alike. So I'm not saying that I reinvented anything with this discussion, but I think it's a discussion that's really worth having again. And I think it is worth thinking about some of those aspects of game theory, right? Could it be that we all decided that everyone else is running for the exit and we better get while the getting's good too? Or is this just someone that's overexposed to real estate, rationalizing their position in real estate? Let me know that as well. Although if you guys have been paying attention, I have rebalanced my portfolio a bit. But anyways, appreciate you guys hanging out with me today. Love the activity in the comment section, guys. It really does mean a lot to me when you're sharing your perspectives. I'll answer a couple more questions or highlight a couple more comments here. So we've got John saying, what's your thoughts on people spending a 1 to 1.2 million for a knockdown house in Ancaster and Hamilton area, and then build these homes for another 900K, then they're listing and selling them for mid 2 mil. I mean, John, if they're able to consistently do that, that sounds like an attractive business model. Again, I don't love getting into that high-end price point. One thing I will say is, I think there's some interesting opportunities. I was recently talking to John from Blackjack Contracting. He comes on regularly on the channel, guys, and we're talking about garden suites, right? And whether there's opportunities there in Hamilton. Because if you've been around real estate for the last decade in Hamilton, you know that doing those duplex conversions, right? That was all the rage. Being able to add another suite dramatically changed the financial math of your ability to carry the properties. I could definitely see some interesting opportunities in the garden suites if and when Hamilton officially releases their guidelines, because I don't think they've given us all the guidelines yet. Right now, I believe it's just Barrie and Aurelia that have came out with their guidelines, but I'm sure all the other municipalities and cities will be close to follow in the near future, and there'll definitely be opportunities there. But if we're literally just building $2 million spec homes, again, I know that people make money there, and that's awesome. I know that this kid's not going to be the guy making money in that space, because my fear is there's so much personal taste involved in buying a $2 million property or building a $2 million property. And that's a whole new aspect. That's a whole new niche. That's a whole new business model and expertise I'd have to develop. And I definitely don't have a competitive advantage just yet. Or just today on a phone call, my business partner, Jeff Weibel, was complaining about how he hasn't had a car wash in the last year. I was thinking, I think I got a car wash once when I was in high school because it was a cool thing to do the first time you had the car. I'm not sure if I really ever did it again since. So again, me building $2 million spec home sounds like a terrible idea for both me and the spec home. But definitely, I get it that people make money doing it. I think the one thing you're going to want to do if you're playing in that realm is really, again, being dialed into the data. So if you don't know who the other builders are in your space, you're probably not doing enough research. If you don't have a great realtor that plays in that space extensively and ideally exclusively, right? The realtor you have selling that $2 million house probably shouldn't be the same realtor that helps us buy the $200,000 condo, right? There's a different level of expertise, different language, different experiences that are going to allow them to maximize the sale potential, which is going to be important when we're dealing with those high-end prices, because there is a greater risk, or at least for me, there's a greater perception of risk. And if there's a greater perception of risk, obviously I want to see a greater reward, just like I want to see a greater reward tonight on the pitch. So reminder, guys, we're going to be going live at 7:30 tonight. We've got another episode of the pitch. These are real deals. We actually do fund them, right? The very first deal I funded with Brandon, from that partnership, we've done over 6 figures in wholesale and assignment fees. So like, again, real people doing real shit, getting real results. Lots of fun. And Brandon actually originally came into the ecosystem back in 2018 at the very first OREC is when we met him. And for whatever reason, he's the only person we got a testimonial from. So at least we got that from Brandon. But it's been a lot of fun getting to work with Brandon and helping him out. So a reminder, we're always looking for new guests on the pitch. The best way to stay informed is to follow me on Instagram. So we often post last minute auditions or opportunities. All you need to do is swipe up on my stories. So jump over to Instagram, follow us. Usually around Monday or Tuesday, if we've got a cancellation, you'll see us put out an advertisement looking for new people to come on the pitch. Again, bring us a real deal and you may be in partnership with us. So really appreciate the fact that you guys are supporting us. Smash the like button if you haven't done so already. And we'll see you guys tomorrow or later tonight on the pitch. Thanks, guys.